Another day of sliding stocks on Wall Street, the Dow rebounding after dropping 400 points earlier today. Taking a look at where the stock markets finished up this afternoon, the Dow Jones down 254, NASDAQ down 16 points, S&P 500 down 22 points. For the fifth day in a row, the Dow and the S&P 500 posted losses, led by tumbling oil prices and losses in financial stocks.
The financial crumble is fueling fears of another recession. Meanwhile, have you looked at the gas prices lately? I mean, it's really the only silver lining in this story. They continue to drop as well. Financial analyst Joe Krier, the president of Krier Wealth Management, joins us now with some insight. So, Joe, can you put this into perspective for us? How concerned should Americans be right now?
Yeah, it's a good time to be watching your nickels and dimes these days. The jury's still out as to whether the U.S. economy is going to be in a growth pattern for the next 5 years or perhaps a slowdown. And, you know, there's some seasonal stuff going on. Usually January and February are stronger months. This year it started out kind of weak, so there's a lot of fear out there floating around.
Federal Reserve Chairwoman Janet Yellen actually testified before Capitol Hill today, hoping to lift investor confidence, but is it working?
Yeah, she's in her normal annual February testimony, and it's been kind of a mixed bag. She's actually tempered her comments a little bit. People were hoping that she'd be talking that the economy's growing robustly, but she's been saying, hey, it's grown since November and December, but not as strong as they had hoped. And on the flip side of that, she's still talking about potentially raising interest rates in March or April or May just to get things back to normal a little bit, so we can maybe earn a little bit more on our savings and checking accounts.
You know, Joe, most people are concerned about, their 401k, their other investments, and it's been bad for a while now. Should there be a, state of panic right now?
Yeah, it's been rough, and going back to August of last year, the market's been more volatile than usual. And usually what happens in market corrections like this, we say it shakes out the weak shareholders, and 401k participants and retirement plans at work are usually the last ones to kind of pull the plug on their investments, and that's not usually a good idea. Staying the course and having a mix of investments that's not all in the most aggressive choices will get people through this, and if they keep contributing money, they're actually buying things at a much lower price now than they were a month ago.
And Joe, as Tarek mentioned, a lot of folks are looking at the dropping gas prices as a silver lining here, but is that a double-edged sword when it comes to our overall economy?
Yeah, it sure is, Lindsay. I mean, low gas is great. It's like a tax cut for every American, and signs are people are putting that money to good use, paying down their debts and credit cards and other things. But the U.S. energy industry is really taking it on the chin. Their profits are down 75%, and there's been somewhere in the area of 75,000 jobs lost along the way. So, eventually the low gas will, I think, win out, but it just takes a little time to play out.
It sure is scary. Joe, thanks for talking to us this evening. We appreciate your insight.